Well, they're certainly concerned about inflation, both globally because of the
Mm.
Fed intervention and also domestically within China. But the real problem is this shows the inherent issue of running a state sector, where if you're going to do an entire infrastructure boom to overcome the COVID problems, then you're going to feed everything through a small group of companies, either on the steel side or on the construction side, many of whom are state-owned. So now that they've created this monster, they have to try to claw it back. And since you don't have a free market, you have to do it through talking, basically through the meeting that the National Development Reform Commission had on Sunday, and then comments, I think, by Liu He last week in the State Council. So it becomes a lot of signaling, which is really not the best way to handle the economy. You should be doing it through price movement, through the free market. So it'll be effective. And the other concern is they're now talking about taxes on the property sector. So they're very worried about the property bubble collapsing. And obviously, higher steel prices would contribute to the higher prices in that sector.
That is all understandable, but it also comes at a time where we've seen a very strong recovery in exports, too. And I wonder if there's concern that perhaps some of this growth will slow, especially in light of what we're seeing with COVID concerns elsewhere in Asia.
Well, that's another question. I mean, the export market has been quite strong in China, much higher in 2020 than anybody expected because of everybody was sitting home buying stuff on Amazon in the United States and Europe. But the leadership relied again on infrastructure construction, which is increasingly inefficient. And they've got to stop that at some point because it's a waste of money in many cases. But they're very nervous about doing it, clearly, because they haven't yet pulled back that much on infrastructure construction. It's coming down, and some of the lending is starting to slow, but it's still increasing at a fairly rapid clip. I think total social financing is up like 10% or so. So, the rebalancing towards domestic consumption and towards getting away from exports, that's not really happening. So they're still relying on the old playbook, and I don't think that's a good way of doing things. I don't know what they're going to do for the rest of the year.